Hello, welcome to day. Reading. And I want to bring our attention to these levels here. Each one of these levels is the opening midnight price, New York local time, for each weekly open, the Monday of each week. And I'm looking at how these levels can sort of assist us on determining daily bias. So if we scroll back a bit here, let's see what we see. Price opens, comes above the weekly open. Now it's considered in a premium. Sort of imagining this like maybe a magnet or a rubber band. The higher above the weekly open it gets, the more sort of in a premium we consider ourselves. The more drastically it trades below, the more of a discount we consider ourselves being in. We almost sort of imagine this to Friday. We almost imagine this as sort of like a weekly range or something. And then based on this weekly open, we sort of imagine it being sort of like a premium discount sort of area. If we did something like this, this is how we're sort of imagining it. So when we come to the chart each day, we sort of look at where we are in relation to the weekly open. The further below we are, the more likely we are to be bullish. If we start off above it, we're more likely to be bearish. So trades above, goes below. Start off below, come down. That's a good opportunity to buy. We shoot up into a premium, come into Friday, price opens, closes below, and we start again. We get the open, trades above the open, and then carries on delivering price to the downside. Here we have again, we go above the weekly open, we go below, we start off below, we go above, and I'm trying to sort of look at this in relation to the power of three, say like the accumulation, manipulation, and then distribution sort of happens on a weekly scale as well as a daily. The whole thing's fractal. So here we go again, we go above the open, premium, looking for short positions open on Wednesday. We're looking for long positions because we're considering ourselves in a discount. That's what happens. Come back up to it, don't quite reach it, still in a discount. Friday, start below the open, trade above it, and we can sort of it doesn't always follow that pattern as perfectly. We still have to combine that with PD arrays and other things we discussed, but let's go in on a 15-minute time frame. Scroll back a bit, and we're going to try and sort of go through here. Okay, so we'll do something like, prior to, get rid of this grey box I added. So we're going to look at where we are, prior to 8:30. So prior to 8:30, we start above the open. So that puts us in a premium, and we get our. That just because we start off above doesn't mean we're necessarily going to be, we're just going to go short. I mean, sure, it does work here. We're above the open in a premium. We'll come back down into a discount. But remember, this is the Judas swing below the equal lows of the London session. So, and, this is sort of the Monday. We don't really have the narrative for the whole week yet. So, just bear that in mind. This kind of gets stronger throughout the week. So anyway, we got the Judas swing. Hard to tell on a 15-minute chart here if we get an opportunity to enter here. Kind of looks a little bit like a consolidation here, doesn't it? So we'll probably just stay on the sidelines for Monday there. Okay, then we come in 8:30 Tuesday. We're above the weekly open, so we can sort of be looking for sells. So we get So liquidity being taken here, we get a market structure shift here. So yeah, we take equal highs here. Then we create a market structure shift below here. Then price comes back up into a fair value gap. That happens in the over the course of the day in the PM session. We go from the most recent high to the low that created the market structure shift. We have to check that we're in a discount in order to be able to utilize that fair value gap, and we also want to see where we are in relation to the midnight open of Tuesday, which would be here. So if we were following the 2022 model there, we don't get our, we want to be above the New York midnight open, so we don't actually get that there, so we're not able to take this trade, or at least we're not able to use the 2022 model. In a minute I'll start revisiting this, looking at breakers and stuff. So for example, if we look at our bearish breaker, say we're anticipating price to go down above it's above the weekly open. However, by the time we get our setup, it doesn't meet the requirements of the 22 model, so we'll look at it this way instead. We'll say sell side liquidity taken, break of market structure happens here, then we need a bearish breaker, which is a high, a low, and then we need a high. We don't get that here, so this is not a breaker we can use. High, low, higher, high, low. Could maybe say this is the breaker: high, low, higher, high. Last up leg in price delivery. That's the breaker. Then we look for our fair value gap, or our inversion fair value gap within the breaker. Then from the high and from the high, which is, where is it? That's the high, that's the low, that's the high. We don't use the high, we say the high to the low. That gives us our standard deviation projection. If we just go, the highest high, or if we say, it's this high here, we just say the whole high of the range, we might not always hit our target. So if we're just going from the high and the low of the breaker, that kind of gives us a low hanging fruit objective. So we need price to come into the discount, which would be here, and this actually gives us a nice entry. We take very little heat on the trade, set our take profit. That's still 88 pips. There's almost 100 pips there. A very low hanging fruit objective. And I guess if we're utilizing PD arrays, we could say, we think, once we get entered into the trade, price is going to come down to fair value gap. Can't really see it here on the 15-minute. Next, it's going to seek a bullish order block. Not really seeing a bullish order block here. And then it's going to seek out relatively equal lows, and we have lows here. So we could be a little bit ambitious and just say, okay, we're going to aim for that discount array. Okay, so let's move on to the next day. I'm going to try and keep the pace going. Okay, as of 8:30, we are trading below the weekly open. So I guess, we haven't seen all of this yet. We're just looking at, this candle here, trying to guess, is it going to be a consolidation? Is price going to go down? But we're below the weekly open. So, we're going to assume we're bullish based on that. We've also got the midnight open of Wednesday, which is, I believe, this candle here. So I'll just put this and say a darker grey, so that's the daily midnight open, the weekly open. Price comes down here. This big move down here is taking out the equal lows of liquidity. That's the first area of liquidity that price gravitates towards. It's leaving the London highs unbroken as of here. So then we look for a market structure shift. Remember, we're looking at it on a 15-minute. On a 3-minute, maybe we see more detail and we get in slightly differently. But just working off the 15-minute here, we get the market structure shift there. So let's see if we can get in with our 22 model. Buy some liquidity taken here. Market structure shift here. Fair value gap near order block. First, let's see if we can see our fair value gap. I'm not really seeing a fair value gap in here anywhere. Let's see if we can at least find the order block. Significant low broken. Bearish candles prior to price rally. This is our energetic price rally. This is the sort of last down close candle before that rally. Maybe if we had a different strategy that was revolved around order blocks, maybe maybe on a 3-minute chart, maybe there is a fair value gap in here somewhere, but I can't see anything that we can use on the 15-minute. Let's quickly see if our breaker block gives us any luck. Let's just try and find the breaker block first. Low, high, lower, low. Low, high. Is this the high? We kind of get this high and low on the same candle here. Low, high. I think we need to be looking at the low as in a close, so it doesn't close creating a lower low here. Yeah, for breaker blocks, I want to see it. If price closed down here, we could say this was the lower low. Then we could use these candles here as the breaker block, and then we could look for an entry there. Unfortunately, I'm not seeing it here, so let's just skip forward to Thursday. Okay, Thursday, we're starting above the weekly open. Looks like price is moving sideways. So based on this, we're saying okay, we're above the open. We're assuming we're going to be bearish. We'd be kind of hard pressed to say that this is a run on liquidity. It's a run on liquidity. This move here looks more like the Judas move. I see these big red candles. Looking at this, it looks like price is breaking out of this range. Looks like it's going to move to the downside. Just from personal experience, this feels more like the Judas swing to me. Closes below the London lows, where this never actually closes above the London highs. And if we'd been paying attention to the daily time frame, we'd also be seeing this daily fair value gap here as well. And we'd be sort of anticipating that price might want to come into a fair value gap, a discount array before it goes higher. So let's say we're observing this. We see price literally just tap into that daily fair value gap before going up. And then that gives us a clue that some sort of algorithmic price delivery is reacting to this. So then we'll look at the 22 model, see if we can get an entry. Buy side liquidity taken, market structure shift, above swing high, fair value gap. We have that here. We want an order block, last series of down close candles before the rally that creates a change in the state of delivery, and most importantly a bigger displacement like this. Finally, price must be, or the entry at least must be below Thursday midnight open, that is here. Ooh, that's annoying. So it looks like we would be saying okay, price has to at least come to here in order to get us into the trade. And we're also looking at the low and the high for a discount as well. Okay, so we're saying it needs to come below this white line, that's the midnight open, but it also needs to be in a discount. Once again, that fails to get us into the trade, at least on this 15-minute time frame. Okay, let's just get rid of all of that. Then we'll switch to our breaker strategy, see if that can give us an entry. We want a low, a high, and a lower low. Okay, well, this time the pattern is much more easy to identify. Low, high, lower, low. Doesn't take much work to see it. We get our final up leg in price. We need buy side liquidity be taken. That's what happens here. We need the break market structure. That happens here. Leaves this bearish breaker, and we're anticipating that price might come back into the breaker. So the entry, which we need either a fair value gap or an inversion fair value gap within the breaker. All I'm seeing here is this big gap here is the only thing I'm seeing. So we're looking for an entry sort of within here. We need it to be within a discount, and to do that we're going to use the low and the high, not the lower low, but just the low. That gives us the low hanging fruit objective. And yep, unfortunately that also denies us an entry, because we want to. The reason we've got all these rules is because it's all well and good saying, oh yeah, we entered here, price went up a little bit, it wasn't really worth it. But like, price could have easily wicked down here. If we'd entered here, who's to say that price wouldn't have come back into this discount area, which is what we wanted. We want price to come to here so that there's less of a chance of it continuing to come down and wick us out. So that's fine. If we were able to identify this and not take a trade, that would be a success. But since we did actually identify that breaker, let's just keep it on the chart. See if it helps us at all. Thursday, that's the... Did we delete the... I think we accidentally deleted our weekly opening price. But it was somewhere around here, wasn't it? Somewhere within this area. Okay, so we start off either at or slightly above the open. Since it's Friday, though, we're sort of anticipating that we've reached the end of the week and we're going to be getting, you know, the last opportunity for price to do some sort of distribution move before the next week. So let's see what we get here. We get 8.30. Price immediately starts dropping before we can really react to it. You know, we would have seen this fair value gap here. Would have been hoping price comes back in. It doesn't. Finally, it comes below. Oh wait, that's our. Okay, just ignore that. That's our weekly open here. Okay, so yeah, being all the way up here, we were anticipating it to be bearish. Doesn't give us an opportunity. When price is just falling like a rock, it doesn't really come back, retrace, give you, you know, an opportunity to get in. And you know, so the Monday and Friday are probably the weakest days to trade. It's sort of Tuesday, Wednesday, and Thursday where be more likely to find the setup. So I mean, we get this swing high here, don't we? I mean, I think we've probably gone below the midnight open, so we're not going to be able to take short positions. I'm not seeing if we get, say, a bullish or bearish breaker, low, high, lower, low. So we've got a bullish breaker here. I guess if price, the idea is that if price goes through the breaker, it's likely to use it as support. If it kind of struggles to get through the mean threshold, it looks like it's going to be resistance. And you know, so coming Monday now, the following week, we've got our red here. That's the fair value gap on the daily time frame. We're anticipating that price might want to kind of trade into that area. We've got our our breaker here. We don't know if it's a bullish breaker yet, because we need, once price trades through it, then that confirms it as a bullish breaker. And that sort of explains why, you know, look at this. You see price once again trades to within, I'm just going to remove the breaker, trades to within literally a hair's width of the fair value gap on the daily time frame. I mean, if that's not some sort of algorithm at play, I don't know what is. So anyway, you know, keeping all of that context in mind, you know, come 8:30 Monday, price immediately, first thing it does is it takes the buy side liquidity, the equal lows, breaks the equal lows of the PM session, and we have some, you know, we're watching this area thinking that might, you know, be a draw on liquidity on price. Okay, so buy side liquidity taken, and then we want a market structure shift, that happens here. Then we want a fair value gap, that's here. We want the fair value gap to be within an order block, you know, or very, you know, near an order block. The order block isn't strictly necessary. It's just, it really helps to sort of give us some context. So that's our order block. Last down close candle before rally. Entry is it within a discount? Fib from the most recent low to the market structure shift high. The most recent low, which I guess would be here now, wouldn't it? To the market structure shift high. Yep, that's fine. It's within a discount. It's below the midnight open. We're going to enter our long position at the earliest opportunity. We're going to try and get as close to, remember we want to stop loss below the body, ideally below the wick. Probably end up just using our maximum stop loss of 18 pips. And you know, I'm going to be honest, I would be setting my target here. I'd be thinking, oh yeah, we got the daily fair value gap here, the price is going to want to go to. We've got the standard deviation lines up. So yeah, I would be entering here thinking that, you know, price is going to make this huge 162 pip run. Oh my god, that's just, let's see how, you know, how far price gets. Okay, so price gets to, you know, 80 pips. I'm thinking it's going to go here. This is where our trade invalidated thing happens. If we're just blindly looking at the take profit, you know, greed, dollar signs in our eyes, it's going to the moon. Have to look at this. Failed to break an old high. So we get a swing high here. Then it starts to slow down into the lunch session. But we're still holding out hope that price is going to make another push, and it does. It makes another swing high, but it's lower than that swing high. So now we have to move our stop loss to break even. Finally, a down close candle violated. So once this swing high fails to break that, then we're looking at this candle here. Once that down close candle here gets violated by this one, now we're going to move the take profit. Actually, I'm going to use a slightly different. I was actually sort of revising this trade invalidated, because originally I was like, okay, once we get the down close candle violated, I'll put the take profit to the most recent high. Maybe price will come back up here and get us out. That just hasn't ever happened. So instead, I'm saying this: we move the stop loss to the previous low. And the previous low, once this down close candle is violated here, the previous low is here, isn't it? So now we're moving our take profit to here. And rather than saying, oh, I hope price comes back up here and hits a take profit, I'm saying, okay, we got the failure to break a swing low, we got the down close candle violated, you know, the writing's on the wall now. Well, if price comes below here, that's a market structure shift down. That's invalidating the trade. Why even wait? Let's just put the stop loss here. That's what happens. Price triggers the stop loss within a profit. Bit disappointing. We never get that. We don't get the massive take profit we're hoping for. But importantly, it's the not every trade is going to reach the target. So let's just go and update these this thing here. Stop loss to previous low. There we go. Okay, so that's our one trade that we take. We were in here for almost like 2-3 hours, so time to walk away from the chart. Okay, we come back the next day. It's 8:30. It's a Tuesday. We're above the weekly open, so we're anticipating things to be bearish. We look at these levels here. Looks like price is going to make a Judas swing below the equal lows, and then we'll be looking for long positions only if we get a market structure shift. But being above the open, we're looking for bearish, and we've already had price reject off the higher time frame fair value gap. So maybe it's time to wait here and see if these get taken out. Yeah, let's put a low here. That's the PM session lows. So yeah, it would, watching price kind of come below there, we might be thinking this is the Judas swing, and that's fair enough. Let's, okay, so this is buy side delivery being taken. Now we've got to wait for a swing, a market structure shift. Doesn't happen. Okay, finally here we get our market structure shift. Probably, this is 15 minutes. If we were looking at this on a 3-minute, we might see that 3 candle pattern here. So, maybe we'll be looking at this as our market structure shift. And it doesn't really look like we get an opportunity to get in there. I'll look at it again with see if we get a bullish breaker. Low, high, lower, low. It's all the way down there, isn't it? Going to lump all these candles together, say that this is kind of the breaker. Looks like price rejects the mean threshold here. So we never really get our... Again, when price is just dropping like this, it's really frustrating because you want to chase price now. I expect you see red candle after red candle. By the time it gets down here, you're thinking, man, if I'd sold here, I would have been in a huge profit. And then you click sell, and then as soon as you do that, price reverses. So we're going to skip that day, come back again on Wednesday, 8:30. We trade above the open. Also take out the PM session highs, so that's sell side delivery being taken. Then we want a market structure shift lower. That happens here. Then we get our, so at this candle here, this wick, that is our market structure shift. I mean, technically it happens here, but I think this looks a bit more obvious here. So that's the market structure shift. Then we can look for the fair value gap. Let's check that we're above the midnight open. Then lastly, we just need to be in a premium. God, I hope we're in a premium from the most recent high to market structure shift low, which market structure shift low is here, isn't it? Oh no, it's not actually, it's here, because we're looking at it there, aren't we? Okay, so we'd be putting our we'll be trying to enter in a short position here. Doesn't get filled. Price goes away without us. Then we can move it to the most recent market structure shift. Technically, this fair value gap is still on the table. Now that this range has increased, now we can actually enter within a discount. We have to wait until the PM session. We have to kind of keep an eye on it. We have to be patient. And thankfully, we get rewarded by the looks of it. Above open, within fair value gap, within discount, market structure shift, by sell side liquidity taken, maximum stop loss of 18 pips. I think we've probably taken 2 trades in like the last week or so. So let's just use all of that. Obviously, I'm always going to be ambitious, aiming for my standard deviation target. Okay, so we get entered into the trade, and this is the first good win that we've had in a while. We get a massive 163 1-to-9 risk to reward ratio. I was before this I was starting to think that maybe these rules were more of a hindrance than not, but my god, did we get rewarded for being methodical and patient. Okay, so we have a really good trading day. I guess we come back Thursday now. Where are we in relation to... Okay, so we've moved below the weekly open. And, by the logic we've been using, we're looking for... looking for bullish price moves. Okay, so I'm looking at this and being honest, I'm saying, oh, okay, we've got the London lows, they've been taken. The problem is, we're already below the PM session lows here. We're already below the London session lows. How can you really say that that's liquidity? I mean, I guess you could argue, okay, we took buy side, now we need a market structure shift. Do we get it? No. Do we get it here? No. Do we get it here? No. It's the PM session. Price makes another big rundown. By this time, after seeing all of this, we're moving into the PM. We never met the second condition to be a buyer. Let's see if we can find any valid break blocks. Well, first we thought price was going to go up, so let's see if we can find a low, a high, a lower low. No, not really. I mean, the body is lower, but the wick isn't lower, and I kind of want both. I want it to be an undisputable lower low. So I'm not seeing it there. What about a high, a low, and a higher high? High, low, not a higher high. High, low, not a higher high. I don't see anything that meets any of our conditions, so we're just going to move on. Okay, Friday. Probably want to avoid Friday. We start off below the weekly open. Why am I saying avoid Friday? If we look at, we got our Monday here. We had a sort of bit of a consolidation here, a bit of an accumulation. Maybe we should have had a manipulation before price, came back up. Then finally, Wednesday, Thursday, we've had this just huge move in price. And after a massive price move, you can normally expect a smaller price move. If price is sort of been consolidating in a small range, it only makes sense that at some point it's going to break out that range and make a big move. After a big move, we tend to get some more consolidation. So in no scenario are we expecting price to just kind of go all the way down here and then come Friday and then just go shooting back up to the moon. That's not really typical of what seems to happen. So just keep that in mind. We're looking for buy side delivery to be taken. Does that happen? doesn't really happen in the morning session. In the sort of over lunch towards the end of the morning session, we take out the high of the previous PM session. So I guess we can now maybe looking at this and we're saying, oh, that's a run on sell side liquidity, which is a fair observation. Although we have had a run on sell side liquidity, but we're also very deep below that weekly open, which means we've got kind of conflicting bias. Yes, sell side liquidity has been taken, but we're also wary that price might want to be going back up to that weekly open. But we want to get in a trade, don't we? So sell side liquidity taken, market structure shift happens here. We've got a swing low here. We have a fair value gap here. I've been taught not to take trades during the London session. During the, not the London, the lunch session. And why is that? If I was looking at here, I get into the enter a trade as soon as price comes back into the fair value gap. I use my maximum stop loss, get stopped out. That's kind of why we don't want to be entering trades in the lunch session. It tends to sort of have some more, I don't know, funny price movement. I don't really know. It's just best to kind of avoid it. It's not really going to complement our rules here. So okay, we wait until lunch is over. We've been trained to only take trades during these kill windows. We get a considerable move down here, so this is kind of validating our sell side being taken. Market structure shift low here, but is that also taking out buy side liquidity? Are we in a ranging market? Is this a consolidation? But we took out the sell side first. We're going to look at this as a break in market structure. We're going to look at this range. We're going to isolate fair value gaps to within the discount. We don't want to use the fair value gap here because remember what we said, we are worried that price might want to go back up to that weekly open, and if it goes up here, it might create a break of structure to the upside and price could just go skyrocketing up against us. So that's why we just want to enter in here. But we also need to check the midnight open, don't we? Let's see if the midnight open can prevent us from making a mistake. Yeah, we are above the New York midnight open, so that's fine. There's no reason why we can't enter this trade. And we're going to enter it, let's see. Well, we actually have to do this, don't we? We want to say as close to this fair value gap within the discount as possible, which is kind of here, isn't it? Yep, and that is a loss, no doubt about it. Ooh, is there anything we could have done differently? Could we have a closer look at this on maybe say a 3-minute chart? Because I'm not actually trading on using a 15-minute. I'm trading using a 3-minute chart. So let's see if we can go back to that losing trade. Have a closer look at it. Don't think we can go. We're going to have to use a 5-minute. Okay, this is where we took the loss, isn't it? So let's look at this again, but from the perspective of a 5-minute chart. Okay. We get our sell side liquidity taken. We get our market structure shift lower. We don't take a trade during lunch. We wait for the PM session. Price then makes another market structure shift low here. So this time we just use the high to the market structure shift low here. a fib from the most recent high, and if we're here, the most recent high would be here. Remember that has to be that's the high that was associated with the high that took out liquidity. So probably looking at this to the previous market structure shift low. So it all depends. Are we gonna use this market structure shift low, or are we gonna use this market structure shift low? It'd be nice to think that we did it like this, wouldn't it? It'd be nice to think that we used the market structure shift low as opposed to the lower low that took out buy side liquidity. I honestly cannot say whether or not I would have, which one of these levels I would have used. But if we had used this level with our 18 pips, and we had our take profit down here, kind of depends really, doesn't it? I mean, should I specify? I mean, I did write the previous market structure shift low, didn't I? So I said the most recent high I mean, we could say that this was the most recent. I mean, if we did this, we'd never get in the trade. And I want to use, you know, the high that took out sell side liquidity. First it was this. We never take our trade. Then as price kind of keeps moving down, we get another market structure shift here. I guess if we, you know, if we were just using, if we had the option between the two, let's say we were debating, it would just be, if we just said we went for the most low hanging fruit objective and used the most conservative option, then we do get in this trade. But you know, I'm not entirely sure what I would have done if this was the first time I'd seen it. If I didn't have hindsight, you know, I honestly can't tell which one I would have used. Hopefully I would have just, you know, took ICT's advice and not traded on a Friday. Let's see if our failed to invalidate statements get us out of this trade before we take a loss. We break an old low here, then we get a swing low, fails to break a low. That'll be the stop loss to break even. I'm still just updating this. Remember earlier I said I'm instead of using the putting the take profit to the last high, I'm actually putting the stop loss to the previous high. Let's just copy and paste that into here. Yep, okay, I think that's correct. Once we get that failure to break a swing low, then we immediately move on to looking at this green candle and seeing if this green candle gets violated. It gets violated here on quite a fast moving candle. We immediately move to close candle broken. Immediately put the stop loss to the previous high. So we are looking at something like this. Now we don't know yet if price is going to keep moving down. So I guess the previous high would be here or something, wouldn't it? I mean, the previous high would be where we entered. So at the very least, this is a risk-free break-even trade. I mean, maybe we could look at this fair value gap here, and we say if price breaks through the fair value gap, it's invalidated our understanding of price. So we want it to go lower, don't we? So let's say we put we're in the trade here, we put our stop loss, say, okay, yeah, this is the last high. I don't know why I'm overcomplicating it. That's the last high. So now we stay in the trade. Price continues to violate candles. We're hoping that once it gets to this fair value gap, it's gonna carry on pushing to the downside, and it does do that. Although, look, we're actually moving into the overnight sessions, and we said we weren't going to do that. We said we were going to be out of the trade by 4. Okay, so forget all of that. Actually, we entered the trade within the PM session. Once it gets to 4 o'clock, I say if it hasn't hit the profit target by 4, I get out of the trade because I got other stuff I want to do with my day. It starts reversing on me. You know, maybe I stay a little bit longer. Maybe I convince myself to stay till 5. But you know, once we get to sort of here, it's now 5, and then I choose to, we'll just go to the worst case scenario and say we just gave back most of our profits. But it's not a disaster. So at least we managed it. Okay, moving on. Obviously, if we keep following these rules, we stay methodical, we avoid doing something stupid like taking 10 losses in one day, eventually we're going to get the perfect trade set up that'll account for most of our profits. And yeah, I think I've gone through enough examples here. I think I'll end this. I might do a part 2 or something and keep going. Don't want to ramble on too long, but yeah, let me know what you think. If you have any questions. Thanks for watching.